Alrighty, well, in the interest of time, I think we can go ahead and get started. So thank you everyone for joining today. I appreciate you being here and I'm looking forward to a great workshop. As always, a couple of housekeeping things. We'd like to let you know that this is being recorded and materials will be available afterwards to help you get started. We will post this recording to our YouTube channel and we will send out that recording link in a follow-up email tomorrow. That email will also have some extra info in it to help you get started with your Savi account if you haven't done so already. If you have any questions, please feel free to put those in the Q&A. We will take a break to answer some questions at the end out loud to make sure that everyone leaves here ready to go. And finally, if you need to use closed captions, I'm sending a link in the chat with instructions on how you can turn those on. So during today's workshop, we'll start off with some quick introductions, and then we're going to spend most of our time talking about important policy updates that are impacting student loan borrowers. So we'll talk about the SAVE plan and some ongoing lawsuits that you may have heard about. We'll talk about the end of the on-ramp to repayment and some new forgiveness programs that were recently announced by the Department of Education. We'll then wrap up with some next steps on how you can leave here ready to go. So thanks again for being here. My name is Jobe, and I'm really excited that you're all here so that I can talk to you a little bit about these updates, help you understand how they impact you, and how Savi can support you through all of these changes. If you're new to Savi, the first thing we'd like you to know about us is that you are our top priority. We'd like to say that we serve student loan borrowers, not student loans. So although we're here to help you find repayment and forgiveness options, we want to make sure that we're putting you first and doing everything we can to support you as the borrower. We've also got insider info that helps us to do just that. Our team has over 2 decades of expertise, and many of us are also student loan borrowers ourselves. I also have student loans of my own, others on my team do, so we know firsthand what it's like to have student loans, and this information helps us to better serve you. And finally, saving has never been easier than it is with Savi, because we help you take advantage of personalized repayment and forgiveness plans so that you can enroll in a plan that is customized to your situation and take advantage of all savings. Savi is your student loan benefit, and we work by partnering with employers and membership organizations to offer our services. We are your exclusive student loan benefit, helping you with any and all things student loans. We like to say that nothing is too big or too small because we'll always do everything we can to help. And the other great news is that Savi is also available for you and your family members. I saw someone ask in the Q&A if their family could use Savi, and the answer is yes. Anyone in your family with student loans can also use Savi and has access just like you do. We want to help as many people as possible. So any spouses, partners, children, anyone in your family at all, they can all sign up for Savi and get some support with their situation as well. Alrighty, so jumping into those updates, let's start off by talking about the SAVE plan, which is one of the income-driven repayment plans available. It was released last year, and there have been some recent updates to this plan, so I'm going to break down everything you need to know. So first, if you haven't heard of the SAVE plan, it is a new income-driven repayment plan that is offered by the Department of Education. It was released last year, and for most borrowers, it's one of the most affordable repayment plans available. It replaced the repay plan, and anyone who was on repay was moved over to save and had their payment recalculated under the new rules. The save plan is available for any borrower who has direct loans. The important note is that Parent Plus loans can't be paid on save, but any other direct loans can. And just like all other income-driven plans, the save plan is PSLF eligible, meaning payments that you make on the save plan will be able to count towards PSLF. So one of the biggest benefits of the SAVE plan and one of the biggest draws for borrowers was that it has an interest subsidy. When you enroll into the SAVE plan, Any unpaid interest is covered by the Department of Education so that your balance does not increase. We've heard so many times of borrowers enrolling and in making their monthly payments, but their balance just keeps going up. In response to this, the Department of Education created this interest subsidy on the SAVE plan. When you enroll, if your monthly payment does not cover all the interest that accrues, the Department of Education will pay the rest of it for you so that your balance does not increase. It's important to note that this does not change your interest rate. It does not change any past interest that has already accumulated, and future interest could still accrue. But if your payment doesn't cover all the interest for that month, the Department of Education pays the rest for you so that your balance does not grow. In addition, the SAVE plan changes how payments are calculated to help give you a lower monthly payment. When you enroll into any income driven or payment plan, they set aside a portion of your income to cover the cost of living. The amount that they set aside is typically a certain percentage of the poverty level for your location and family size. Under the SAVE plan, they set aside a higher percentage of your income. This results in a lower leftover amount and a lower monthly payment. So, an easier way to think about this is that in general, no borrower who earns less than $15 an hour will have a monthly payment on the SAVE plan. Even if you earn more than $15 an hour, you would likely still see savings by switching over, since this plan provides one of the lowest possible payments across all income driven plans. Alrighty, now getting into those changes. You may have heard about some ongoing lawsuits to the SAVE plan, which have put a lot of this up in the air. Some more improvements were scheduled to start on July 1st, but some lawsuits were filed that put those changes on hold. So, starting on July 1st, payments were supposed to be lowered to only 5% of discretionary income for undergraduate borrowers. That would have been a decrease down from the current 10%. In addition, borrowers who had lower original balances were supposed to qualify for a shortened timeline to forgiveness. So, borrowers with balances of $12,000 or less were supposed to qualify for forgiveness after only 10 years of payments. However, those lawsuits put these changes on hold, and a recently released decision by a federal court on July 18th ultimately ended up putting the entire SAVE plan on hold. So the July 18th decision prevents the Department of Education from operating the SAVE plan in its current form. So, what does this mean? Well, in response to this, the Department of Education is still trying to figure out exactly what they can and cannot do. The first thing they are doing is putting any borrower who is enrolled in SAVE into a forbearance. A forbearance is just a period of time where you are not required to make payments on your student loans. So, for those of you that are enrolled in the SAVE plan, you'll likely see those forbearances popping up on your accounts very soon. This is so that you don't have to make payments on the SAVE plan while the Department of Education is sorting this out behind the scenes. A couple of things to note with this forbearance is that it is interest free. So you, again, won't have that interest during the forbearance. But also, an important thing to note is that this forbearance does not count towards forgiveness. So, for those of you who are pursuing PSLF, you won't be earning PSLF progress if you're in this forbearance, meaning that it will push your forgiveness timeline out. If you want to keep making payments and you want to not be in this forbearance, you do have the ability to switch to a different income driven or payment plan if you would like to continue earning PSLF progress. We're going to continue to monitor this. If we hear of any updates where this forbearance now counts for PSLF, we'll be sure to notify all of you. There's a lot of kind of moving parts here. New information is coming out all the time. So we're watching this closely and we'll let you know about any updates. The other impact that these lawsuits have had is on the actual processing of applications. To give them time to update their systems, take into account these new rules, and figure out what exactly their response is going to be, the Department of Education is temporarily pausing the processing of IDR applications. You can still submit your application, but they're going to hold on to it, and it will take longer than usual for it to be processed. If you have applied to change your income driven plan through student aid in the past, you may know that you can submit that application online. However, they have temporarily removed that ability, so you cannot submit an IDR application through studentaid.gov. They are accepting paper applications, though. Savi, even though you complete our applications online, we do use paper applications because we fax your completed applications to your servicers. So while you cannot apply through student aid, you can submit those paper applications and you can apply like normal within your Savi account. So for any of you who are wanting to change your repayment plan, now is a really great time to use your Savvy account because you can apply as easily as possible and you don't have to worry about doing that paper form and faxing it to your servicer. And the last thing to note is that although the SAVE plan is on hold, all of the other income driven plans are unaffected and are still available. So Pay, IBR, and ICR are all still available, and you can enroll in those plans if you meet the requirements for them. As I've said, these updates have been coming out. Sometimes the updates come out multiple times a day. Sometimes things will change by the hour. There's so much going on. So we are monitoring this. We are eagerly awaiting more updates from the Department of Education. And as soon as we know more, we will share that with you. We are already taking steps to update our website and ensure that the results you're seeing in your Savvy account are aligned with the current policy. We will be sure to let you know if anything changes. And if you have any questions, feel free to let us know, and we're going to do our best to get you through this, what can be a confusing time. Alrighty, so that is the current status update on the SAVE lawsuits. Now, let's talk about the on ramp to repayment and what the end of that means for borrowers. So, when payments resumed last year, the Department of Education created the on ramp to repayment. Essentially, this was a safety net that helped protect borrowers as they transitioned back into repayment. With payments being paused for over 3 years, many borrowers struggled to resume those monthly payments, start budgeting for it, things like that. So, this on ramp to repayment helped alleviate some of that stress. During this on ramp period, if you had a late payment, if you missed it, or if you only paid a partial amount, you would not be reported delinquent and you would not default on your loans during this period. Unlike with the COVID payment pause, interest is still accruing during this time. So if you miss a payment, while you won't be penalized for it, keep in mind the payment or interest is still accruing. And also, payments are still due, and you should make your payment if you can, especially if you're pursuing PSLF. While you won't be penalized for missing a payment, not making one won't earn you any progress towards forgiveness. This on ramp was available immediately once payments resumed, and it's going to end on September 30th, which is next month. So, what does the end of the on ramp mean for you? After that September 30th date, if you miss a payment, you could be penalized for it. Just like in the past, before the COVID payment pause happened, if you miss a payment, there could be late fees, it could affect your credit score, you could become delinquent, and even default on your loans. So, we are really, really encouraging you to make sure that you are in the best situation possible for the end of this on ramp. You're going to want to check your payment amount and make sure that it is affordable and that you can manage that payment. If it is too high and you are needing some help, we encourage you to check out income driven repayment plans because usually those provide a much lower, more affordable payment than offered on the standard plan. Keep in mind that under normal circumstances, income driven applications take about 4 weeks to process. With these save updates, they're probably going to take even longer. So, right now is really the time that you should be looking at your payment amount, making sure you can afford it. And if you can't, now's the time to start thinking about switching that repayment plan. You can use your Savvy account to see what options are available. Remember, on that results page, we're going to show you what your monthly payment could be under different repayment plans, and we can even help you to switch over. Alrighty, next update for you are some new forgiveness initiatives. So recently, the Department of Education announced that they were trying to help more borrowers qualify for forgiveness. So here is what those are and what we know about them so far. This was a very recent announcement by the Department of Ed, and we are still waiting on kind of some more of the details to be released. But what we know so far is that the Department of Education wants to help more people qualify for loan forgiveness. Specifically, they are targeting four distinct groups of borrowers and helping them receive forgiveness. The first one are borrowers who owe more now than what they did at the start of repayment. So if you have had runaway interest and your balance is now higher than it was when you first started repaying, the Department of Education is considering canceling that interest for you. The other one is borrowers who have been in repayment for decades. If you have undergrad loans and you've been paying for more than 20 years, and if you have grad loans and have been paying more than 25 years, they are considering forgiving that entire loan balance as well. Another group is borrowers who meet the requirements for existing forgiveness programs but have not yet applied. So these are programs like income driven forgiveness or closed school discharge. These are borrowers who already meet the requirements but haven't applied, so the Department of Education is going to make it easier for them to get that forgiveness. And finally, borrowers who enrolled in low financial value programs. So going to schools that did not result in the benefits that they promised, schools that failed Department of Education standards, things like that. So these are the four groups that they are targeting, and it's important to note that this is not set in stone. At this point, it's still sort of in the works, making sure that it can happen and kind of in the proposal stage. It has not been fully approved yet, as the final rule has not been published for these initiatives. But how does this impact you? Well, if you fall into one of these four categories, it is possible that you'll be eligible for some immediate forgiveness on some or all of your loan balance. The Department of Education has begun notifying borrowers that would qualify for these programs. So they have already begun sending out emails. They're going to continue notifying borrowers. If you are not interested in receiving any of this forgiveness, you have until August 30th to opt out. If you are notified that you can qualify but you don't want to receive the forgiveness, simply reach out to your loan servicer and let them know that you do not want to receive it. Otherwise, if you do not opt out and you want to receive this forgiveness, there's no action needed and it's going to be done automatically. One key important thing to note is that, again, this forgiveness is not official and is still pending. So these are sort of announcements on what the Department of Education intends to do, but it is not set in stone. This forgiveness is not guaranteed and ultimately is up to the final approval once these rules are published. Just like with all the other programs, sort of the running theme here is that Savi is going to keep up with this for you and let you know if there are any updates. We just heard about this, I believe, last week. It's more of a recent update. We're waiting on more details to come out, such as the timing of the forgiveness being available, whether or not it will for sure be available, all of those things. So we are going to monitor it. We'll let you know if we have more details or if this is expanded to include more people. So those are the main three updates. Those save lawsuits, the end of the on-ramp to repayment, and the release of those new forgiveness programs. Let's cover a couple of frequently asked questions, and then we'll wrap up with how you can get started with your Savi account. So one of the first questions that borrowers have is, how can I get my loan forgiven? Right now, there are two main programs that offer loan forgiveness to borrowers. These are public service loan forgiveness and income driven repayment forgiveness. For public service loan forgiveness, or PSLF, this program forgives your remaining loan balance after you have worked in public service and made payments on your loans for 10 years. In addition, there are some specific requirements that you need to meet. You need to be working full time in public service. You need to have direct loans, and you need to pay on an income driven plan. Once you've met those requirements and made 120 payments, an entire amount will be forgiven. If you don't qualify for public service loan forgiveness, another great plan that can give forgiveness is IDR forgiveness. This one forgives your remaining balance after you've been enrolled in an income driven plan and made payments for the required amount of time. Uh, just to show you how often things can change, my slide is a little out of date here because those save changes did not take effect. So disregard that second bullet. And right now, you have to pay for either 20 or 25 years on income driven plans before you can qualify for IDR forgiveness. If you're interested in seeing your eligibility for either of these programs, you can see that in your Savi account. We'll show you which of these programs you qualify for and how much forgiveness you could get under each of them. If there's any steps necessary to become eligible, we'll even help you to take those so that you can get on track for some forgiveness down the line. What do I do if my payment is too high? So, if your payment is unaffordable and it's more than you can pay, we really recommend using Savi's personalized repayment estimator to see what other options are out there. Your Savvy account will show you each repayment plan you qualify for so that you can explore options for lowering that payment. Typically, we recommend enrolling in an income driven repayment plan, since that's going to help lower your monthly payment and give you the most affordable option. Plus, it has the added benefit of counting towards forgiveness programs like PSLF and IDR forgiveness. Once you've entered your information in your general Savvy application, we'll show you everything you qualify for on the results page, and you can pick one of those plans to get enrolled and switch over. Can I still enroll in an IDR plan even though Save is on hold? Yes. So we have seen some confusion about this from borrowers recently. The Save plan is on hold, so anyone on Save is in that forbearance. But all the other repayment plans are still available. So you can still enroll in an IDR or switch to a new one. Keep in mind that right now they are experiencing processing delays and it will take longer than normal to process your application. But all other three plans are still open, still accepting applications. And if you are interested in enrolling, you can submit those forms to get switched over. How can I apply for programs through Savi? So here's what that results page looks like, where it breaks down details like what your monthly payment could be under different plans, your timeline to forgiveness, and how much forgiveness you can get. Depending on which program you are pursuing, the Savvy application will then help you create the necessary forms. If you're switching your repayment plan, we will create and submit that income driven repayment plan for you. If you're applying for PSLF, we will create and submit that one for you as well. Creating and submitting your applications through Savvy is an essential or a pro feature. Our DIY plan provides you with instructions on how you can submit those forms on your own. But if you'd like to digitally submit them through Savvy, you can be a essential or a pro member, create your digital applications, and we will submit them for you. And can Savvy help me with my loans? 100% yes. We want to help anyone and everyone we can. So as you've seen, you'll be able to enter your information in your Savvy account, and we're going to show you those personalized options for everything you qualify for. If you need more help, you can enroll in our Essential or our Pro memberships for one-on-one support from our student loan experts. Some of them are on today helping answer questions, so you might see some familiar names if you reach out. We can help with everything from resolving loan servicer issues, answering questions about your eligibility or recent changes, and getting you on track for forgiveness. And as I said in the beginning, no concern is too big or too small. We will always do everything we can to support you. Alrighty, let's go over a couple of next steps on how you can get started with your Savvy account or return to it, and then we will open it up for some questions. So we want to make sure that you have access to your account. If you're a new user, you can scan the QR code on the left to sign up. You can search for your organization and be redirected to their unique sign up page. We do have those special sign up pages for each of our partners, so search for yours to be redirected to the correct one. If you're a returning user, you can sign back in anytime at buysavvy.com. When you're using Savvy, it's as simple as these 3 steps. The first thing you'll do is start a general info application with us. You'll provide some of your general info so that we can run the numbers in the background for you. Things like family, income, and loan info. We'll run the numbers and show you what you qualify for on step 2. You'll compare all options to see different repayment and forgiveness plans available for you and choose whichever one works best. On step 3, you can then submit those applications to lock in any and all savings. Don't forget to select your Savvy plan. Remember, it's free to create your Savvy account and there's no cost to seeing what options are available. Our free DIY plan lets you see what's available and provides you with instructions on how to submit everything on your own. But if you want to unlock more Savvy features, you can enroll in Essential or Pro. These premium plans unlock more great features like digital application creation and submission, ongoing application and loan monitoring, and have access to personalized support from our student loan experts. Our Essential plan is our most popular plan, and if you need an even higher level of support, there's our Pro plan, which includes all essential features plus added benefits of a personalized onboarding session, dedicated phone support, and a comprehensive student loan review. You can see what these plans are, see the pricing, and enroll from your Savvy account. These are annual memberships. In many cases, employers and organizations do offer discounts on them. Typically, our Essential plan, which is our most popular plan, is no more than about $70 per year. And as I mentioned, many organizations offer discounts on those prices. So access your account, check out these options in there, and enroll in whichever one is going to work best for you. And if you ever have questions, don't hesitate to reach out. You can click Contact Support from any page of the Savvy website to access resources. We've got our Help Center, which includes articles on common student loan topics, frequently asked questions, and even videos that show you how to complete certain steps on our website. If you're enrolled in Essential or Pro, you'll have the ability to contact our support team through a variety of methods. You can send us an email message. We have a new live chat feature. Pro members can schedule those phone calls with us, so a lot of different ways to reach us. Access all of these resources just by clicking Contact Support. Alrighty. So as we wrap up, and before I open it up for questions, I will leave you with some next steps. As you've seen, there is a lot going on in the student loan world, and I expect even more updates to come within the coming months. We encourage you to keep up with us and stay in contact by accessing your Savvy account. As long as you've got access, we will send you, those regular communications about updates. We will invite you to upcoming workshops, and it really just helps you stay in the loop with all of these changes that are going on. We encourage you to make the most of this benefit by enrolling in Essential or Pro. This unlocks more features, the best of which is that personalized help from our student loan experts. So if you need assistance with things like resolving servicer issues, questions about your eligibility, or you just need someone to talk to, that Essential or that Pro membership can really benefit you by giving you access to support. And don't forget to complete your application to see what repayment and forgiveness options are available for you. So that's everything I've got for you today. I appreciate everyone attending, and I hope that you have found these useful. We host these sort of policy update workshops on the first Wednesday of every month. So feel free to attend our next one, which will be a month from now in September. And again, we're also going to send out communications to keep you up to date between now and then. For now, though, let's take a look at the Q&A and see if there are any common questions we can answer out loud. I know some of our support team members are on answering questions now, and I see there's almost 60 questions in the Q&A, so let's see what we can answer. What about borrowers who received a letter from the Department of Ed stating that I don't need to recertify until November 2024? So if you were already enrolled in an income-driven repayment plan, typically you have to recertify your income every 12 months. However, because of the COVID payment pause, that really extended recertification dates and pushed them all back. So typically you would have had to recertify already, but they pushed those recertification dates back and you won't have to do so before November. I also see it looks like some people are asking for our YouTube channel. I can send that link in the chat as well. It's youtube.com/by that is where we post our workshop recordings, and I believe there's some general info in there to help you get started with Savi as well. Is it true that you can be denied an income-driven plan due to being over the income eligibility? So the different repayment plans each have different eligibility requirements. Some of them, for example, Pay and IBR, do have requirements where your outstanding debt has to be more than your discretionary income. So there are some cases where if your income is high, it may disqualify you from one of the plans. However, everyone qualifies for at least one income-driven repayment plan. So no matter what, there is going to be at least one plan available for you where your payment can be based on your income. Your Savvy account can show you your eligibility for all the plans that you qualify for, as well as what your payment would be under each plan. Is there anything I can do to get credit for all those years of public service? Yes. So when you are enrolling in public service loan forgiveness, you submit something called an employment certification form. This form is signed by you and your employer to prove that you work in public service. If you worked in public service in the past and you made payments on your student loans while working there, that time likely can count towards forgiveness. You can turn in an employment certification form for that employer and get credit for all the payments you made while working there. That's also something that you can do within your Savvy account. You can add your employment history, and we will estimate how many payments you already have and will help you turn in the forms to get credit for that time. Where can I find information about forgiveness amounts being added to my taxable income? Um, there should be information about that on student aid as well in the Savvy Help Center. Uh, in the future, if you receive income-driven forgiveness, that forgiveness could be considered taxable income in the year that you receive it. A bill was passed a couple of years ago that made all of that forgiveness tax-free through the end of 2025. So if you receive income forgiveness now, you won't be taxed on it. From 2026 and on, though, however much forgiveness you receive will be considered taxable income for that year. Can I pay the IRS in installments? I believe so. If I'll say if you're concerned about the tax bill on any forgiveness you receive, in almost every situation, whatever taxes you'll pay is going to be less than the forgiveness that you'll receive. If you are concerned about that hefty tax bill, though, you can coordinate with the IRS. I believe they have installments and repayment options available. And again, overall, even with a tax bill, typically this overall savings are still going to be more by getting the forgiveness than with paying the taxes. I'm making my IDR payments to Mohila. Should I continue payments the same way? Yes. So if you're in a forbearance, you'll be notified and you will not have to make payments while the forbearance is ongoing. If you are not in the forbearance, you should definitely continue making your payments so that you don't miss anything and you don't get penalized. Can I consolidate Parent Plus loans with my own loans? Yes. So Parent Plus loans, even though you took them out for your children, are technically your loans and in your name. You can consolidate them with your own loans if you would like to do so, and that will combine all of your loans into one loan with one kind of amount, monthly payment, etc. How do I know if I'm on the save plan? You can look at your servicer's account and it should tell you what your payment amount is as well as your repayment plan. If you're having trouble locating that, feel free to reach out to our support team and we can help you figure out what repayment plan you are currently on. How can I find out how many payments I've made? That is something that you can use Savi for. When you add your loans to your Savi account, we can see your repayment history and we will be able to look and see how many payments you've already made, as well as how many you still need to make until you qualify for forgiveness. I've been paying my school loans on an IDR plan and have not taken a break since after the COVID hold. Will this count for PSLF? Yes. As long as you've been on an income driven repayment plan, making your payments, that time can count towards forgiveness. I'm worried because I'm on the save plan, but I've just been sent a bill for September. Why am I not in forbearance? So, the Department of Education and servicers are, I'll say, notoriously sometimes slow to respond. They have massive amounts of borrowers that they are managing loans for, and it takes them time to get everybody's statuses updated. Uh, Once they get to it, they will get you into that forbearance. Um, Even if you're not on it yet and you see that payment, don't worry. They are going to get to you. We recommend still making the payment if you can, just so that you don't be missed over anything. But if you're not in that forbearance, really, that's not going to impact you too much. It's not going to update your eligibility for forgiveness. It doesn't mean you'll miss out on anything. So if you're not in the forbearance yet, don't worry. Just continue making your payments. And if you're on the save plan, you'll likely see that forbearance status on there soon. What happens if I pass away and I still have my loan balance? Also, if I have low income now, what can I do? In the event that you pass away and you still owe a loan balance, that remaining amount is going to be forgiven and your family will not be responsible for repaying it. In the event that you have low or no income right now, it's really recommended that you enroll in an income-driven repayment plan. Typically, if you have no income, you'll be approved for a $0 monthly payment where you do not have to make student loan payments. So if you are retired, if you're an older adult, income-driven plans are a great option because they can give you a low payment where you do not have to make any payments. If I'm on an income-driven plan and my monthly amount is zero, am I still accumulating interest? It depends what plan you're on. If you're on the SAVE plan, interest is still accruing, but the Department of Education will pay that for you. So basically, your loan balance will kind of just stay where it's at. If you're on any of the other three plans, though, there is no interest subsidy for those plans, and interest will be accruing and your balance could increase. If I'm on the SAVE plan, will that count towards forgiveness? Yes. Payments on the SAVE plan will count towards both income-driven forgiveness and PSLF. Keep in mind that if you are in a forbearance right now due to the lawsuits, that time will not count. But any time where you are making payments will. I see a couple of people wanting to know how they can get in contact with Savi. The easiest way to get in contact with us is to log into your Savi account and click the contact support button. It's in the lower left-hand corner of every page on our website. So if you are needing to talk to someone and get in contact with us, click contact support, and there will be several different ways that you can reach out to us. My son has not started paying his loan because he graduated in May. He's about to start paying soon, though. What should he do? So right before that repayment begins is one of the best times to start using Savi. Your son can have access to Savi through you, so he can sign up just like you did, make his own account, and enter his information. I'll say for recent graduates, most of them qualify for a low or even $0 monthly payment. Uh, Most recent grads, haven't started earning high amounts of income, and most income-driven repayment plans use their most recent tax return, which will likely be low from when they were in school. So I'd recommend your son creating a Savvy account, seeing what repayment options are available, and probably his best option will be an income-driven plan, which will give him that low, potentially even $0 payment. My employer said Savvy was a free benefit. What does this mean? So Savvy is not yet available to the public. We are only available through employers and membership organizations. So if you have a free benefit from your employer, that means that you have access to Savvy by working for your employer. Since we're not available to the public yet, you got access by working for your employer. Can I talk more about the tax hit starting in 2025? Yes. So the there was recently a bill passed a few years ago that made the income-driven forgiveness tax-free through 2025. After that, though, any income-driven forgiveness you receive will be considered taxable income in the year that you receive it. Since the transition of Mohila, is there a new mailing address and fax number to submit paper applications? Yes, I do not know it off the top of my head. I do know that Savvy is updated and submitting our forms to the correct place. But for a quick recap, PSLF used to be with Mohila. It's now with Student Aid. So there is a new fax number and address to submit paper forms there. You can find that on the Student Aid website. And if you submit your forms with Savvy, we have already updated our systems to submit them to the correct place. Previously, I was told that I was one payment away from PSLF. Do I have to reapply once I've made the 120th payment? Yes. So payments are not automatically updated, and you have to turn in new forms to prove you kept working and get credit for more payments. After you've made your 120th payment, you can turn in a new form that is signed by your current employer, and if that puts you over 120, will automatically process forgiveness on your remaining balance. Can I still sign up with Savi? Yes. I will send the link in the chat. If you happen to know the unique sign up link given to you by your employer or membership organization, you can sign up there. If you do not know it, I'm sending a link in the chat where you can search for your employer or membership organization, and you'll be redirected to their unique sign up page. So you can click that link, search for your employer or organization, and you'll be redirected to their unique sign up page. While on forbearance for Save, do I have to do something else or do I just wait till the lawsuits are settled? You don't have to do anything else. Your payments will be paused for the duration of the lawsuits. Once more is decided, whether the Save plan is going to stick around or if they need to make some changes to it, we'll expect more updates then. But in the meantime, if you're on that forbearance, you are not required to do anything. You can enjoy not having that monthly payment if you'd like to do so. I doubt my kids are eligible for loan forgiveness or income-driven plans. Can Savvy help people like this? Yes. So everyone is eligible for at least one income-driven or payment plan. Most people qualify for more than that, though. I would really recommend anybody, no matter what your situation is, check out your options in your Savvy account. It doesn't hurt to check, it's free to do so, and you'll never know what options are out there if you haven't looked into it. Another question about the tax change, this time about PSLF. I know the future change to it can be confusing, so I want to clarify some. For income-driven forgiveness, which is forgiveness given out after paying for 20 or 25 years, that is tax-free through 2025, but after that, it will be considered taxable income. That is specifically for income-driven forgiveness. For PSLF, that is tax-free permanently. A bill was passed that made PSLF forgiveness permanently tax-free. So, recap: PSLF, always tax-free. Income-driven forgiveness, taxed after 2025. Will there be a recording available? Yes, we will post this recording to YouTube tomorrow, and we will send out that link to all of you in that follow-up email. I'm getting a consolidation required message through the Savi application. I already consolidated, though. What should I do? So as long as those old loans are linked to your Savi account, it's going to think that they still are there and that you need to consolidate. If we told you to consolidate and you've already done that, you'll want to update your loan sync. You'll want to remove those old loans and replace them with the new consolidated loans. Once you have done that, you've updated your loans to their current status, it will then stop that consolidation message and you'll be able to see those new repayment and forgiveness options. I just signed up for Savvy Essential and it recommends I consolidate. Does this recommend the best course of action? Yes. So depending on which plan you are selecting, you may require consolidation. If you have loans like FEL loans or Parent Plus loans, those need to be consolidated before they can enroll in these programs. If you choose a plan that requires consolidation, we will recommend that to you. You'll be able to see again how much forgiveness you'll get, total payment, things like that, so that you know if it's beneficial to pursue consolidation. To savvy navigate transferring loan servicers? Yes, we can help with that. Especially recently, a lot of new servicers have popped up. Some old ones have stopped servicing loans. So if you have changed servicers, we can help with that. We can help you figure out who your servicer is and link your new servicer to your Savvy account. What's the difference between SAVE and IBR? So these are two income-driven or payment plans. They have different eligibility requirements and calculate your payment differently. For the SAVE plan, anyone with direct loans is eligible for that plan. So anyone with direct loans can enroll in the SAVE plan. The SAVE plan is 10% of your discretionary income. The IBR plan, though, does have a requirement where your debt has to be more than your discretionary income. So not everyone qualifies for IBR. In addition, the IBR plan does take 10% of your discretionary income as well. But one more difference between them is they each calculate discretionary income differently. All that to say, your payment could be drastically different between the two plans. And if you do qualify for them, Savvy will show you the different options to help you figure out which of those plans is going to be more beneficial for you. If my loans are forgiven for next year through PSLF, will that be considered taxable income? No. It looks like there's a lot of questions about these tax changes. So one more time, PSLF is tax-free permanently, whether you receive it now, next year, or in 2040. PSLF forgiveness is permanently tax-free, and you do not have to worry about being taxed on PSLF forgiveness. Income-driven forgiveness, which is forgiveness through an income-driven plan after 20 or 25 years, that will be taxed after 2025. What does it mean when my dashboard says that I'm forgiveness eligible? It means that we think you'll qualify for forgiveness under programs like PSLF or income driven forgiveness. You can see the specific details of what forgiveness program that is and how much forgiveness you can get in your Savi account on the results page. I married but filed my taxes separately. I chose Save because it excludes spousal income. If Save goes away, are there other plans that exclude spouse income? Yes. All other plans exclude your spouse's income if you're married filing separately. A couple more questions about people trying to get in contact with Savvy for some help. Uh, you can click contact support from your Savvy dashboard to reach us. And remember, one-on-one help is a feature of the Essential or the Pro memberships. I started an application before, but I'm not sure if I still have an account. If you created a Savvy account in the past, you definitely still have one. If you are not sure of your password, you can reset that. And if you need more help, we have some information on accessing your account in our help centers. What if you filed married for the last year but are now separated? In this case, your situation has changed since your last tax return. So you would want to indicate that you're either married but separated, and then you will only be prompted to use your income. That way, they will base it only on your income and not your spouse's. What if I have not made payments because I was always an income contingent? So if you had a $0 monthly payment, that time will count towards forgiveness. So even if you haven't made a payment because you qualified for a $0 payment, that will still count. Alrighty, I know there's more questions. There's still over 30 questions in the Q&A, but we've got just under a minute left. So I wish we could, but unfortunately, we are not going to be able to get to everyone's questions today. So I want to kind of wrap up real quick, leave you with some next steps from here. If you have a question that we did not get to today, I would really encourage you to check out your Savvy application, and there's a good chance you could find the answer just by completing your application, especially if you had questions about your eligibility for programs. Questions like, will these past payment counts Can I qualify for forgiveness? How much forgiveness can I get? That Savi application will likely give you an answer to all of those. But if you still have that question, you're still looking for some more support, please don't hesitate to reach out to our support team, and we would be more than happy to help any way we can. So that is everything we've got for you today. I really do appreciate your time, and I hope that you guys have found this workshop useful. We host these ones once per month on the first Wednesday of the month. So feel free to attend another one next month to hear about whatever policy updates are happening then and get answers to your questions as well. So thank you again, everyone, for attending. I appreciate your time. I appreciate you all being here, and I hope you have a great afternoon.